Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of the financial world without putting you to sleep. Today we're diving into Capricor Therapeutics' latest report, and it seems like they've hit a bit of a bumpy road in their drug development journey. But hey, at least the numbers are telling a story. Before we jump in, if you love getting the real scoop on company filings, make sure you're subscribed and hit that notification bell. And if you want to chat about these findings with fellow finance fans, join our Discord community, linked in the description below. Alright, let's get into it. Capricor is a biotech company focused on developing treatments for serious diseases like Duchenne muscular dystrophy. This report covers their financial situation up to the 30th of September 2025, and it's packed with details about their progress and challenges. First up, the balance sheet. On the asset side, Capricor has about $126 million in total assets. That is down from over $170 million at the end of 2024. Largely because their marketable securities, which are basically investments for short-term cash, have decreased significantly. They still have over $19 million in cash, which is good, but the drop in investments signals they might be using that money to fund operations, which isn't always a bad thing for a growing company, but it does reduce their financial cushion. Now, liabilities and what is left for the owners. Total liabilities are around $42 million. A big chunk of that is lease liabilities, about $14 million worth. This comes from them leasing office and lab space, which is expected. Stockholders' equity is down to about $83 million from $145 million at the end of 2024. This is mainly due to their accumulated deficit, which is essentially the total losses the company has incurred since it started bleeding cash. That deficit is now over $274 million. That is a pretty big hole to climb out of. Let's talk about where the money is going. Their operating expenses are significant as expected for a company in drug development. Research and development costs for the 3 months ending September 2025 were over $20 million. That is a big jump from about $11 million in the same period last year. The 9-month total for R&D is over $61 million, up from about $35 million in 2024. This huge increase in R&D spending is mostly because they've hired more people and are pouring more money into their Duchenne muscular dystrophy, program deramyocel, and their exosomes research. Specifically, the report breaks down R&D costs for the 3 months ending September 2025 compensation, and personnel expenses increased by a whopping 100% compared to the same period last year. That is $3.7 million more dollars just on people costs. The deramyocel program saw expenses jump 35%, and their exosomes platform research expenses nearly doubled. This shows they are heavily investing in growing their research capabilities and pushing their key drug candidates forward. General and administrative expenses also went up. For the 3 months ending September 2025, they were almost $6 million, up by 71% from last year. This surge is mainly due to higher stock-based compensation and increased professional services, which likely includes legal costs related to their ongoing initiatives. The 9-month GAA expenses are nearly $18 million, up by 67%. Again, stock-based compensation and personnel costs are major drivers here. So with all this spending, it is no surprise that Capricor is still reporting significant losses. Their net loss for the 3 months ending September 2025 was about $24.5 million. That's almost double the loss from the same period last year. For the 9 months ended September 2025, the net loss is a staggering $74.8 million, an increase of over $41 million from the same period in 2024. This translates to a net loss per S-Hair of 54 cents for the 3 months ending September 2025. This is a big jump from last year's 38 cents per S-Hair. While the number of shares outstanding has gone up, it's not enough to offset the massive increase in losses. Looking at cash flows really paints a picture of their day-to-day operations. For the first 9 months of 2025, they used $46.2 million in operating activities. That's almost double the $25.2 million they used in the same period of 2024. This mainly comes down to that increased net loss we just discussed. On the investing side, things are mixed. For the 9 months ending September 2025, they had $54.4 million provided by investing activities. This is heavily influenced by changes in their marketable securities portfolio. They sold off a lot of those investments, which gave them a cash boost. However, they also spent over $6.6 million on property equipment and construction projects. For financing activities, they had very little activity in the first 9 months of 2025 with only $77,000. This is a stark contrast to 2024 when they brought in over $71 million from financing. This difference is mainly due to the public offering they had in October 2024, which brought in a large amount of capital. So what does all this mean for their cash situation? As of the 30th of September 2025, Capricor had about $98.6 million in cash and marketable securities combined. This sounds like a lot, but they project it will only last them into the fourth quarter of 2026. Given their current spending rate and the fact that their R&D and GI costs are increasing, they are definitely burning through cash quickly. The company acknowledges this significant concern, stating that they do not have enough cash on hand to support current operations for at least the next 12 months from the date of filing. This is a critical point, and it means they will need to find more money soon, possibly through selling more stock or other financing methods. Now let's talk about the company's strategy and what is driving these numbers. Their lead product candidate is deramiocel for Duchenne muscular dystrophy. This is a cell therapy aiming to treat the heart complications associated with DMD. They had a pre-biologics license application meeting with the FDA in the third quarter of 2024 and completed their rolling BLA submission in December 2024. It even got priority review status with an anticipated action date of the 31st of August 2025. However, things took a turn in July 2025 when they received a complete response letter from the FDA. This means the FDA is not approving the drug yet and wants more clinical data to prove its effectiveness. This is a big setback and a major risk for the company. The FDA also pointed out some issues with the manufacturing section of their application. The good news is they had a follow-up meeting with the FDA in August 2025. The FDA agreed that their ongoing phase 3 trial, the HOPE-3, will be considered the additional study needed. This opens a path forward, but the top-line data from that trial is not expected until the fourth quarter of 2025. If the results are positive, they plan to resubmit their application, which could take up to 6 months to review. One thing that consistently pops up is stock-based compensation. For the 3 months ending September 2025, it was almost $4 million, an increase of 94% from the previous year. For the 9-month period, it was over $13 million, a huge 163% increase. This means a significant portion of their expenses is going towards rewarding employees and executives with stock options and awards. While this can be a good incentive, it also dilutes existing shareholders and adds to the overall cost of running the business. On a more somber note, the company is facing some legal challenges. A securities class action lawsuit was filed in July 2025 against the company and its CEO. Following that, a derivative action was filed in August 2025 against the board of directors. To raise also a shareholder demand letter from September 25 seeking to inspect company records. These legal battles can be very expensive and distract management from their core business. So what is my take on all this? Capricor Therapeutics is in a high stakes game. They are making significant investments in their research and development, with R&D expenses more than doubling in a year. This signals a strong commitment to pushing their drug candidates forward, especially deramiocel. The FDA's complete response letter is a major hurdle and creates uncertainty about their near-term revenue prospects. While they have a decent amount of cash on hand, it is being rapidly consumed, and the report clearly states they need more funding within the next year. This cash burn, combined with the regulatory setback and ongoing legal issues, presents a substantial risk. The large increase in stock-based compensation also means they are heavily relying on equity to retain talent, which could impact share value for existing investors. Ultimately, Capricor is betting big on deramiocel's potential success. If they can navigate the regulatory process, get that BLA approved, and secure further funding, their current losses could eventually turn into profits. For now, it's a risky proposition with significant potential rewards, but equally significant downside. Alright, that is our deep dive into Capricor Therapeutics' latest filing. What do you think about their strategy and future prospects? Let me know your thoughts in the comments below. If you found this analysis helpful, give this video a thumbs up and subscribe for more corporate breakdowns. And as always, join us on Discord in the description to keep the conversation going. Thanks for watching. See you next time.